a moment, but before we do so, we're just going to thank our sponsor here behind the scenes that make these shows possible, and then we'll be joined with Chris just after this. Check it out. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys, we are back with Chris and Frank now. Hey, Chris, how's it going, man?
I'm doing well, guys. How are you guys?
Good to see you.
Good.
You too. Just getting some positions running on Pfizer, right? Meow.
Oh, okay. A little Pfizer action.
It's been a while.
Explain to us what you're doing here, Chris, because Pfizer is an interesting one. I've had so many of my stock buddies. I'm thinking of Garrett, Frank. They've been asking, hey, is it time on Pfizer? So what do you think, Chris?
So on the weekly chart, here I'll share my screen and we can go back and forth if you guys want to. So let me do this.
Yeah.
I am going to do something synthetic. I'm not going to take any ownership. I've had ownership. I have it in my personal account. I've been doing some covered calls. This is nice to see. My break even's like 28.50. I'm like back to break even now. I'm not really getting the premiums that I want to sell calls against it. So what I'm going to do is I'm basically doing just a call option, but I'm doing something deep in the money. So I'm buying the 25 call and I'm going out to January of this year, or I'm sorry, January of next year. So I'm doing like a leap essentially, and I'm going to sell every 30 to 60 days. I'm going to sell a call against it. So here's the way the calculation works right now. I am doing a 1/17/2025 expiration. So this is on Pfizer. Everybody see me typing this out. Yeah. So we'll do, this is the $25 long call, right? I'm paying $4 and about 80 cents for that. So that's my debit. Okay. So that puts me at a break even around 29. So that's 29.80 is my break even. What I'm doing now is I'm selling a 5/17 expiration $32 sell call for 28 cents credit. So that lowers my cost basis on the actual option. So 29.52 is going to be my break even. Now at $32, if Pfizer is greater than 32, I can let it go, right? Like I can let this go at 32. I don't have to wait all the way to January. But that would give me a net profit of around what? $2.48. So 248 would be my profit. I'm using a position like 10 contracts. So you can do the math there. That's 2480. And possibly that 2480, as far as buying power too, it's like, that's way cheaper than buying the stock. If I bought 1,000 shares of Pfizer, it's going to set me back, $25,000. I buy this, it sets me back, $4,800.
So Chris, let me jump in and just ask a question here on behalf of maybe some of the newer options traders, aka myself and Frank. We're wondering, I'm wondering, why this instead of just owning the shares? I know there is an answer, but I'm just trying to ask on behalf of somebody who might not understand it.
Yep.
So Pfizer's trading down here. If you like Pfizer, why not just own the shares And what's the theory here with setting up your options? I know obviously it's in the name, optionality here for what could happen, but
Yep.
lay that plan out for us in just kind of layman's terms.
Sure. So if I own the shares, it really is, let's talk buying power. So the thing I sacrifice if I just do options is I don't have any dividends. I don't have any voting
Yep.
rights. So
Yep.
I forfeit that. However, if I own shares, let's say, and I'm taking a position that's worth 1,000 shares. Okay. So this is what I'm talking about. So 1,000 shares is 10 contracts and options. But if I own 1,000 shares and the current price is 28.49, this is what it's going to cost me to take the trade. 28.49 times 1,000. It's going to cost me, as far as
Right.
cash and buying power, $28,490. Right now, not everyone has that type of capital to say this is what I'm going to allocate to Pfizer. So what
Right.
I'm doing is I'm taking 10 contracts and I'm doing a $25 long call for $4.80. Now that times 1,000 is $4,800.
Right.
So just in buying power alone, there's a huge difference, right? I mean, I'm saving myself $24,000 roughly in buying power. I have
Yep.
been watching this stock for months and months because I have been in this drawdown as I've like taken, and I bought the shares, and I looked left on this chart. I started buying Pfizer around 34. Credit spreads, assignments, I ended up owning it with a credit spread that pushed me down to like 29. I've lowered my cost basis a little bit. The premiums have not been great. Now, I will
Mm-hmm.
admit I might be early to this, but what I did see on this daily time frame, you can see we have tons of overbought conditions. So this, Nick, you know this indicator very well.
Of course.
Overbought conditions, or I'm sorry, oversold conditions with the relative strength, and we have divergence with the momentum oscillator. Now, in the weekly time frame, I don't see this very often, but man, when I get something like this on a daily and weekly chart, I am extremely interested in some type of correction. Some
Mm-hmm.
type of correction.
Yep.
Therefore, I think we have a directional play where Pfizer gets a little love. News wise, what I read this week is that they're starting to pivot away from all the focus on COVID vaccines and work into more cancer vaccines and work into more cancer treatments and work into other drugs. Maybe they should get into Ozempic. Just throwing it out there. Maybe it helps.
Yeah.
But point is, I mean, technically, we're due for a little bit of a recovery. I think fair value on this stock is around $34 to $35. And so I'm not looking to hold longer term on Pfizer. I'm looking to see over the next maybe 3 to 4 to 5 months. If this thing goes from lows at
Sure.
26 up to 32, 33, $34, I'll take profit. Longer term, I'm not that
Fair enough.
interested in holding. Yeah.
Yeah, that's awesome. Thanks
So
for
that's
breaking
where
that
it's at.
down for us, Chris. And again, I think for audience members who are just tuning in, Chris, of course, he has a ton of experience in all sorts of different markets, everything from FX to stocks to indices to commodities to whatever. And it's always cool to hear from you, Chris, on how you're kind of approaching and really carving out what you like to do with options. And I do think that is one of the coolest things with options is you can really carve out a specific trade. And as you've got it on the screen there, like mapping it out literally with
Yeah.
how a trade can play out. Frank, what do you think about you've been dabbling with some options, and I wanna kind of just hear you out on some of your recent plays. I know you're doing something with Neo. What's your breakdown on Neo right now?
Sure. Neo is probably the only or one of the only things that's doing well for me right now. I'm still learning how to figure out the execution, I guess, on options because I've been taking some short-term plays on IWM, and
Hmm.
I guess like when it expires, even if supposedly it's in the money or at least that's where it was marked at. I wonder if I'm reading it wrong or something, but they don't come out profitable. So
Yeah,
it's it's weird to see some of these plays work out in the price, but then you realize a net loss. So I'm trying to figure that part out, but I'm
like if you
in
just bought
Neo.
a call or bought a put, like doesn't it have to get past your break even point?
So I had an iron condor, a sell iron condor. So price had to get within this price range. If it
Mhm.
expired in that price range, you would walk away with, certain amount of money, which happened. I saw an expiration when price was there, but I guess it was executed on expiration at a different price.
Mm,
So I have to just keep looking into that and stuff. But for now, I've been selling or I've been doing verticals on Neo for the past
yeah.
2 weeks. Last week was a good week for me, and now I have two verticals on Neo, and price is still doing well. Let me see where the verticals are. Um, so I have one. Uh, there's I think it's a sell put at 6, and then a buy at 5.5, and then I have a 6 and then a 6.5. So I'm just basically hoping price stays above 6 the whole time, and by Friday, if price ends up higher than $6, I'll expire with the full amount of premium, and then I guess the the buy put will offset some of the gains, but it also limits your loss. So I'm only
Mm,
fixed to get a certain amount um,
sure.
with this sell put because I'm collecting premium, but I'm also buying a put. So that will expire worthless if it stays higher than 6, which is fine because the premium I collect is net more overall. So the two verticals are working out so far, and hopefully, price stays above that range.
Very cool. Thanks for breaking that down, Frank. And I guess, one of the things too with options and any of that sort of approach, it's very much impacted, and this is why we talk so much heavily about the indices themselves, right? If you have something that is exposed bullish or exposed bearish, it's going to a lot of times come down to what the indices are up to. Speaking of them, we are currently seeing, the Nasdaq down on the day, 0.7%. What I find very interesting is that the S&P 500 relatively unmoved, sitting at all-time highs. I imagine this is probably semiconductor exposure. Is that right? Yeah, it looks like a little semiconductor pullback here on the day. And if Nvidia is in the red, then I won't believe it because it never's in the red. Well, we're down 2.75% on Nvidia. I don't know what Chris, what do you think about this? Is the Nasdaq going to lead if we see a pullback? Like, is it going to lead the downside? Do you think?
I think Nvidia is probably one of the most important stocks to watch right now because it is going to single-handedly be the reason that the market might turn over. So we've talked about how overbought things are, how divergent things are, how there's likely a correction. What's the major catalyst going to be? Market didn't seem to give a crap about, slightly higher CPI yesterday. We've got PPI tomorrow, FOMC next week on Wednesday. If we're putting in a top on Nvidia, and we get and all I did on Nvidia is this. I mean, here's a crazy run from $390 to the highs at almost $1,000. But if we struggle at these tops and this goes sideways, I think the entire market goes sideways with it. And if we obviously break lower to hit like a 30 to 38% retracement on in Nvidia, and I still think that we can have dips. I think that we can buy the dip, and this could be a
Yeah.
healthy correction with high volatility. And it's this is the big earnings gap, right? So if we have a pullback into here, I think Nvidia still stays bid, but that is enough to be that correction. And it would be crazy to think like one semiconductor stock is going to drag the whole market down with it. But look, Apple's already down. It's the biggest company in the market, right? Largest market
Yeah.
cap.
Yeah.
Google's down.
Like the
Tesla's
undefeated
down.
name Apple, here it is
Right.
struggling. I just want to show you this. I'm gonna leave you guys with this before I step out. Check this out. Here's your heat map for the day. Very
Yeah.
curious. I answered my own question here on accident with the S&P 500. It's almost exclusively today, very uniquely so. It's tech selling and led more heavily today by semiconductors. So the reason
Hmm.
the Nasdaq's down, but the S&P 500 is because is not necessarily very down at all, is because the SPY has got all this name in it more heavily, whereas Nasdaq is very concentrated in this area. So kind of interesting to see. Chris, Frank, I'll leave you with that, guys. You guys have the show here for a few minutes. Enjoy it. And I just want to say before I step out too, for those of you guys who are newer to seeing a stream with Chris, and Chris has his own YouTube channel, he has his own content that he puts out, wonderful stuff there. And if you're not already following him, we're going to drop the link to his YouTube channel. At the same time, he has a Discord channel you can join, all that sort of good stuff. I'm sure you'll hear about it there. So Chris, thank you very much for taking over the show, man.
My pleasure. Thanks for having me as always. Frank, you want to stay on for a little bit?
Yeah, I have
Cool.
a few things I want to ask too,
Awesome.
or just I guess let you know about.
Okay.
I'm also in. I think I told you yesterday or the day before that I had calls on the VIX,
Mm-hmm.
and then I had a call on a short semiconductor ETF.
Okay.
I think I might have played it wrong because the expiration date I picked is Friday for the semiconductors,
Okay.
but
Which is that SMH? Is that the ticker?
it's SOXS.
That's right. XOSS. Yeah. There's also an
And
XOXX, which is the semiconductor. So you're in the leverage ones, correct?
right.
Yeah, you're in the triple. All right. So this is an inverse, yeah. So if you're long this is an inverse semiconductor
Correct.
play. So this would be up as the semiconductors go down. So SOXX, if this is going down, then X or SOXS would be going up. Okay.
Yes.
So are you in this with any ownership, or are you in this with just strictly an option play?
It's just an option play. It's just a call.
Okay. And what's the expiration and everything? Give me the setup.
Yeah, it's the 15th, so Friday.
So this Friday.
Yeah, which
Okay.
was too soon in my opinion when I look back.
Okay.
But the average price was 12 cents, so that was the debit.
Okay. What's the strike price?
3.5.
So
it's
you
gotta
did
be
a
350.
350 call for a 12-cent debit. Is that accurate?
Mm-hmm.
Okay. And right now that is not showing any profit, right?
Right.
Because your break even's 362. It's not, I mean, I think you're right when you said the expiration's too soon. Because if we're not there by Friday, you need this instrument to be at 362 or better for this thing to have any profit or be break even.
Yeah.
That's all.
But
So I'm cheering for you. If you give yourself a little bit more time, think about this. A 322 expiration, and one thing you might do if you're willing to, we can take a look at this. If I built this out right now, so SOXX, that's okay. I forgot the triple leverage one. Okay, so SOXS there. So if we went out to the 15th and you have a 350 call right now, that 12-cent debit that you paid is trading for 5 or 6 cents. If we were to roll this as an example, and here's what you can do. If you rolled it, you would close the current one for a small loss of like 7 cents, and then you would rebuy a new one. If you want to keep the same strike at 350, that would cost you 15 cents. So for a roll, again, not saying this is what you need to do, should do, but just as an option. So we would close, let me do the math here. It's just give you a little bit more time to see, like, maybe the overall market does have a chance for the semiconductor space to drop a little bit lower. If that is the case, then a little roll could help, but let's calculate a new break even just in case. So if we did, you have the 315 expiration, 350 long call for 12-cent debit. Okay, if you want to look at like a 328 expiration, 350 long call, that debit's trading for shows about 16 cents right now. Okay, so if you wanted to roll this, you could roll, which would be a minus 6 cents on this call, and then you buy a new one at 16 cents. So your net debit would be around 22 cents. So that
Where's
changes your break
the
even from 350 to 372, but that gives you an extra week to see if this thing can rip to the upside.
is the -6 coming from the current value being 6 cents? And then
Correct.
okay.
Yep. So if I go back to the 15th right here, can you see if I make the numbers a little bit larger? Maybe that helps. If we
Yeah.
go 100%. So you can see that the 350 call that you're in is trading for about 5 to 6 cents right now. So you're
Yeah.
going to lose 6 to 7 cents on that. If you close it and if you roll it, it does close that trade out and then reopens a new one. So you essentially close this call, open up a new call, and your net position would be it's going to cost you 22 cents total. So your 350 long call is now break even at 372, but you get an extra week out of this. And so if 372 is achieved by next Friday, then you're in the money. And all we need to see that I mean, what would be that percentage move? Because what we can this is a triple leverage instrument. So if we go up to let's say 370 and change, that's a 16% move, which triple leverage, we need about a 5% move in the semiconductor space. So if I go
Right.
SOXX, can we drop 5%? Well, let's find out what this current price is. So that decline to fill that gap is 3%. I mean, 5% it's possible, but that's a bit of a stretch by next week, unless on a weekly time frame. Let's check the ATR for a second. Okay, ATR averages about $12. Let's say we have a $12 move from current price. If we have a $12 move from current price, which is a weekly average, that's around that 5.756%. That puts your potential inverse ETF up around 17 to 18%.
Okay, gotcha.
It's going to be close, right? Or
It is
what's the worst case scenario? You lose 12 cents, right?
Yeah, so the idea of these calls were basically just shorts on the market was because I'm very long in my stock account on Webull. So
Okay.
these were kind of minor hedges against what might happen.
I see what you're saying.
So it wouldn't necessarily offset the losses if the market just tanked, but
Yeah,
it would pad a little bit. So losing money on here is to a long call on the short semiconductors
hmm
triple leveraged ETF um, is more so just a small hedge. So I'm not
sure.
too worried about these calls, but I do like the idea of rolling it because I still think the semiconductors are a bit high in
Yeah.
my opinion.
Well, I don't love the idea of rolling it with just 1 week out because again, a long option, I mean, you have that waterfall effect, right? Where if you do a long option and price doesn't go your way pretty quickly, then you have that theta decay, and that's where you start to lose value on these options quickly if price isn't going your way. Now, let me ask you this: you're talking about being long in your overall portfolio. What about just doing so? Instead of doing the triple leverage stuff, what if you actually just looked at an option on the actual semiconductor ETF itself?
Yeah.
And because I say that because this price integrity would be a little bit better than the triple leverage one that's going to be, recalculated and that's meant for like very short term hedges. Not saying that we can't have the same move, but again, it's going to be a totally different price and it's obviously super expensive. But when you say you're long overall in Webull, like what does that profile look like? Do you own like fractional shares of Nvidia and fractional shares of AMD, or what do you mean when you're saying long?
No, I have like if I go to my account,
hmm
I'm like 80 to 90% in the market. So that's being long S&P, that's being long tech stocks like Shopify, oil, Google, Tesla. So a
I
lot of
got you.
money is in those things. And yeah, Tesla's already doing pretty bad this year.
It is.
But if the rest of the market starts coming down too, that means I'm holding like a lot of tech. So
Yeah.
trying to leverage against that is my
Okay.
goal.
That's fair. Yeah, I mean, it makes sense, and there's all look as you and I've talked about. It's like there's always trade offs, right? There's always trade off in trading options. There's always trade off in a portfolio to balance it. I mean, I look at it this way: the pairs trade would be if you're long tech, right? If you're long tech and tech goes down, if you're long, defensives, or you're long, consumer staples, um, that's a way to kind of pairs it where, if tech dips, and obviously the last 30 years tech has been the easiest thing to own and the most upside, and it's been ridiculous how quickly it snaps back. But what is interesting this year to me is how basically Apple has been the financing for Nvidia. I mean, Apple could do no wrong. It essentially traded just like the S&P for the last several years. Mag 7, it's number one. It's been, it's still one of the largest. It is the largest in the market right now, but Nvidia is not that far behind, right? Nvidia is now $2.23 trillion. Meta is $1.26 trillion. I mean, you're talking about Nvidia being bigger than, I mean, you have Google, which I think technically because of GOOG and GOOGL, so 1.75 and one. If I'm not mistaken, like Alphabet as a whole is still larger than Nvidia, but barely. Um, this stock is just ridiculous. And what's insane, and this is where I think I'm just thinking out loud here. If Nvidia, and I'm just going to throw this out there, if Nvidia, let's say we rally back up to these highs again, and Nvidia for a split second crosses the market cap where Nvidia is now the largest company in the world, something tells me that I don't think that's sustainable. I don't know if that signals more of a top. I don't know. It just does. It just seems
I think
weird to
so
me that a
too.
company can come out of nowhere and be the largest, the largest company in the world and surpass something like Apple. And it kind of feels like a bubble to me. But anyway,
I agree with you, although I think because of this whole AI, the
mhm,
AI sales are basically a new growth market for them. So what kind of felt like they had their peak and they're one of these not blue chips, but they're kind of like Apple, I guess, reaching this sort of plateau and it's still growing, but not at the same amount. Now that they have this whole new market of stuff I hardly understand really, but the sales that they make in AI, the revenue generated in that particular market,
mhm,
uh, basically started them over as another growth stock.
right.
And this is just, I think, right now is all the potential. This is like the hype, the potential of where the
Absolutely.
market's going to be. So I agree with you.
Yeah,
It's too high now. It's going to have to come down and work its way back up there with
sure.
the value it generates over time.
Yep.
But yeah, I think as soon as it's like this is the largest company on the market right now, that's like buying the rumor, selling the news sort of idea. Once it
It
hits that,
absolutely is. Yeah. And the hard part is, I mean, this is a trend I don't necessarily want to short. I'm not interested in shorting Nvidia. I'm interested in a reality check. And like I showed here, it's like this low to this high. I mean, I'd like to see just a very common, easy to find pullback level. And I
right?
do think the market's interested in buying it again, but give buyers a chance to come in my opinion. So anyway, it's going to be an interesting play. I shared this morning in my trading room. A couple things you guys can put on the radar as well. I listened to some interesting content last night. This guy was pretty wise as far as monetary policy is a decision from the governments. It's a decision. Right now we have essentially synchronized monetary policy from the entire central banking world, meaning this: the Fed, everyone is watching the Fed. Everyone is looking for the Fed. The ECB and the Bank of Canada want to cut rates. The Bank of England wants to cut rates. All these other central banks would love to cut rates. The Fed is holding firm right now. And arguably, we had CPI data that was a little bit stickier this week on Tuesday. We go into FOMC next week. We know that Jerome Powell's been very consistent on his language, right? So, a
Yeah,
couple things that I'm taking away from this. As we get into March and see a pause, we don't have a Fed meeting in April. We come into May. That gives us more months to see, like, where is the CPI data going? If the CPI data does not get below 3% year over year, everyone wants to see the Fed cut. Everyone expects to see the Fed cut. They went from a 6 or 7 cut forecast this year to like 2 or 3. And if our inflation data year over year does not get sub 3%, I don't think the
It'd be
Fed is
0.
necessarily looking to cut to appease the market. And that could be in line with, where we see this buy in May or a sell in May go away type adage where you have this big run up ahead of the Fed and all of a sudden they disappoint the market in some way and a little bit of reality just grips the market for, maybe this summer. Now, another thing that was interesting is if we see an uptick in unemployment anytime in a calendar year, if we've seen a running 12-month window of unemployment going up by 1% or more, it is always followed by a recession, which I thought was interesting because all I kept reading about the last several years is going back in time since, the 1970s and 80s, where anytime we have an inverted yield curve, there's a 24-month window to have a recession. Well, I thought it was
We're
interesting. Like
past
now
that
there's an
now.
unemployment factor that goes with it, which to me makes a big difference because the Fed's true like mandate, they have a dual mandate, right? They want price stability and they want job stability, right? So it's price stability, job stability. And if we see an uptick in unemployment, that's going to either force the Fed to be more reactive. That's going to, but it's crazy, like 1%. So if we go from, and we just had a tick higher to 3.9, but you go back a year, I went back to February of last year, March of last year, we're sitting around like 3.3, 3.4. So one thing to watch on the unemployment factor when we have these non-farm announcements is looking to see if we start to see 4.2, 4.3, 4.4. If those numbers start popping in, that's that 1% window where I think, again, everyone's been talking about a recession for 3 years. We're staring at all-time highs and the market rips, and thanks to Nvidia and thanks to other stuff, the market just keeps ripping. But reality is somewhere out there. Reality under the hood is somewhere out there, and maybe it's unemployment, maybe it's the Fed being reactive, maybe it's the Fed not appeasing the market with rate cuts. And again, I'm
No,
pontificating, if
I'm
you
with
will, but
you.
it's just there's a lot of stuff out there that have to be factored in.
I agree with you. I also think there's a big difference between the situation. Oh, what's this? Yes, please. Happy birthday, Drew.
Donut
It's
time?
Drew's birthday,
Nice.
so
Happy
he's
birthday,
giving me
Drew.
a donut for his birthday.
That's awesome.
But he's back.
Happy birthday, Drew.
Here he
Hey
is.
everybody.
Happy birthday, Drew.
Hey
Chat,
guys.
chat, say happy birthday to Drew.
Say happy birthday.
Chat
Thank
it
you.
in.
He's 21.
Oh boy, just a child, just a babe.
Just kidding. He's like 27 or something.
Okay, nice.
But
Hopefully those are fancy donuts.
yeah. What was I going to say? The idea of rate cuts. I feel like there's two scenarios, and
Okay.
one of them is if inflation is coming down towards that 2%, that's more of a luxury for the Fed to cut rates.
Yes.
Seeing rates or seeing inflation stubborn or slightly higher
Yep.
with lower output and worse jobs numbers, that kind of forces the Fed to start. They kind of have to do something now. Leaving rates where they are is clearly not working because inflation is going higher, jobs are falling, the economy is doing worse. So what do they have to do? It kind of forces their hand to start cutting rates, and that would be a bearish scenario in my opinion.
Yeah.
Where they cut rates and it's not a good sign.
Right.
So seeing one of those two in different contexts determines whether it's a good or bad thing. That's how
I agree. And again, I'm going out to the end of the year with this watch tool, and the market is still pricing in anywhere between, 75 to 100 basis points different than where we're currently sitting. So I do think that rate cut cycles are likely. I think there's that 2 to 3, maybe 4. And this is the thing is, I always hate how important the Fed is. But the adage right now, it's like don't fight the Fed. And so the market waits with bated breath every single month with the Fed, with Jerome Powell, with an FOMC, and all these big decisions. And sometimes we don't get a major catalyst or mover until it's all about the Fed. And so this week, CPI and PPI, not much is happening, right? Like we had some volatility yesterday where, market dips down to, I'm looking at the SPY, we dipped down to like 511, and then rip up to 516, 517. Today for a Wednesday, kind of the meat of the week, there's not much happening. And so I don't think I was looking at some 0DT opportunities. I was like, maybe I can do something at 520 on the SPX or 520 on the SPY. I just don't think we're going to have enough movement today. I'm seeing my call and put option volume sentiment favoring the put side, but I'm not getting much follow through on it today. And my gamma levels and open interest are extremely thin. So I don't know, man. I think like the market's just kind of waiting for something. And this is what is frustrating, right? Like think about trading currencies and hurry up and wait. Like you take a buy on a currency and then it's like there's no follow through. I mean, I'll go back to this. I'm not sure what you and Nick are looking at for the dollar index, but I'm literally day after day looking at this dollar index and thinking like I don't know what the dollar wants to do. I think that we have a situation where risk off flows. If we get risk off flows, that should help the dollar go up. If we have risk on flows and this just melt up keeps happening, then sure, I can see the dollar, drifting lower, but I don't see the dollar plummeting. I mean, if we go down and retest support in the dollar, I see the dollar being range bound this year. And right now, it's like the dollar still has one of the best carry trade opportunities in the market. I don't think the BOJ is going to do anything that unravels their monetary policy to disrupt the forex market as of now. So, I mean, again, what am I doing? Like, is any of this discussion actionable? I mean, I think you and Nick talked about it a little bit this morning. I mean, I like gold a lot. We had this run. I've been long since this break above 2070, and I am trading options around GLD. And I think I've got two measured moves here. My ultimate target on GLD and gold, gold up here with a measured move. You take this breakout and plot it up top. We're looking at 2470 on this. Like this is 100% completion if we get there. Okay. Now I took a halfway point, which is around 2271. To me, that is a high probability target. So if we have a break on gold, a pause on gold, I'm looking for that to be my next run to position for. So gold is up, Bitcoin is up, silver's making a decent run. Silver to me has even better potential as a breakout trade. We're just not quite there yet. We've had a nice little run off these lows at 22, but silver to me has upside to 35. And the way I get there is we either, test this level or we break out above 26 and we go. But I'm looking at, buying SLV down here, taking some paper trades on those ETFs. But I'm only going to trade like the spot price, not the miners. I'm not interested in gold miners. I'm not interested in silver miners. Not yet, but I just think that the actual like spot price continues to go up. So gold and silver, we'll see how they play out. Gold's had a nice bull run. And I think it's interesting, like not a lot of people are talking about it. It's like it's ran up without a lot of people noticing. And maybe it's because the stock market's up as well. So like nobody's feeling gold right now as a hedge. Nobody's feeling gold as like it's an anti-inflation play. Like nobody's in gold because they're already killing it from equities if they've been participating over the last year,
Well,
So
you and Nick are on the same page. I never pay attention to metals outside of gold, which
mhm.
I mean, obviously I should. So that is also strange to see that silver, just because it doesn't move is why I don't really watch it.
Yeah.
But because it's moving hard with gold, that was the first indication for me that there's probably something bigger going on here. And I think that when you say you don't think the dollar it doesn't know where to go, that's because the
Mhm.
Fed doesn't know what they're gonna do yet either, and we
That's
don't know what
true.
the Fed's gonna do.
Yeah.
And what you said, gold could trail lower. You don't think it will collapse. It's still a good carry trade, and so I can see the dollar really getting hurt in this scenario. I don't know the extent of how far it could fall, but I definitely think that the dollar index can go much lower. It can make that lower low you got with that falling trend line at the
Mhm.
bottom.
Yeah.
I think that's very possible within like a year or so, just because of if this trend is going to continue and gold, the way it's moved so far, there's a lot of money going into this sort of hedge against the dollar. Bitcoin's
Agree.
up too, like what you're typing.
Yep.
Bitcoin now, you're seeing legitimacy behind a cryptocurrency.
Yep.
Um, which is also very strange because adoption is not necessarily um, a factor in this scenario. It's just gold or the dollar does not seem like the place people want to be right now, which is kind of scary to think about. So,
Yeah.
uh,
If we had that conversation of, is the dollar going to be denounced as world reserve currency? Again, I know a lot of people are thinking like, what about? I think it came up in the chat this week. What about BRICS? Right? What about with what is it? Brazil, Russia, India, China, BRICS, and then everything that's anti-dollar. I mean, the reality is the dollar is still a very efficient and super liquid reserve currency. To all of a sudden, dethrone that, to destabilize it, I think that has a lot of repercussions for the entire financial industry, the entire global economy. I'm not saying it's going to be not challenged. I think that that's what's happening now is like we're clearly seeing the dollars challenged out there, but I think U.S. economy is still large, and unless when I type this out, gold and silver and Bitcoin up, we're clearly seeing the dollar going down. But in addition to that, I mean, if the dollar gets weaker, it's going to be interesting if we have not only like these precious metals, but also commodities in general. If we have oil going up, if we have uranium going up, if we have all these different energy plays for, something that's just a bigger move against the dollar across the board. And you're right. I mean, if we go back to a higher time frame here, we can see plenty of technical reasons for the dollar to fall, right? At the same time, this is where the dollar was back in, the early 2000s when we had a, dot-com bubble. We look at this trend line. So I would point out like that's where the dollar could be. This is where the dollar can find some support. If we have a high, low, lower, high, lower, low, you're right. I could see the dollar breaking 100, and we had that fake out over the holidays. But could we break? Sure, but how much lower does it go compared to that support or compared to this trend line?
I mean, that's a very good question. I don't know. I
Yeah.
don't know if anyone knows, but
Well, I mean, we don't know. I mean, nobody knows. It's nobody has a crystal ball. I just think that we watch. And so what I'm saying for the last couple of weeks is I'm waiting on a little bit more confirmation on the dollar. And I know that I'm possibly wrong, but I am currently, I'm long dollar Swiss, I'm long pound dollar. Those are not going to go in the same direction, right? One of those will be a losing trade. Now, for me, I'm a little bit more stubborn on the dollar Swiss because I get positive swap. That thing's at 20 and 30-year lows. I'm still going to hold that dollar Swiss long. Pound dollar, I reverse positions. Euro dollar, Aussie dollar, New Zealand dollar, I'm waiting on. Dollar CAD is garbage to me. I don't know if you guys trade the dollar CAD much, but it has been like the sloppiest currency pair for me the last couple of years. And all I'm waiting for is a good opportunity to do something with it. Right now, it's in the middle.
yeah.
I have no interest. Down here, I'll buy it. Up here, I'll sell it. In the middle, it is so difficult to pick a direction because, could oil keep going up and drop the dollar? Sure. But down here at 32, 31, and 30, I'm going to buy the dollar CAD all day. The BOC is not going to be more hawkish than the Fed at some point. Now, yes, oil could help the CAD a little bit, but structurally speaking, if we hit 32, 31, or 1.30 on the dollar CAD, I'm buying this thing for 1,000 pip upside. So
Right.
there's always going to be a trade. That's what's kind of nice, right? Anyway, somebody's asking about gold. I mean, I think we just talked about it. I like it, right? I'm
That's
long
like
and I'm
all we've
looking
been
for.
talking about.
Yeah, I mean, I'm looking for continuations. It's just I think if we get a decent pullback, I'm buying the dip. Somebody asked me yesterday in my Discord, like, what if I got long now? It's like, well, I mean, if you got long now, that's fine, but give yourself enough time to let this thing, have a breath, right? This is a big rip on gold that we haven't seen in a while. So a little bit of a pause is fine, but what spurs this higher? We probably have to get through the Fed. We probably have to get through, it's going to be like an April, May window. If we're going to go any higher, we have to give it more time. I think that, there's this instant gratification that happens in trading because you've got zero DTE and you can take a trade and watch it happen, but there's always a timeline. I'm looking at for the next 3 months, could I be right in direction? For the next 12 months, can I be right in direction? And I try to position for that. So one thing I want to talk about with you, I mentioned this, we were chatting offline, but this trade, I'm going to monitor these couple because I built this and constructed this a bunch of different ways this week. And this is quickly becoming one of my favorite ways to play like week to week. The nice thing is you can see on my chart as far as my risk analysis, this is just it's a complex options trade, but all it means is I need about 50 points on the SPX one way or the other. The weekly average is 100. So in a given week, I am highly confident in the probability that I can get a 50 to 60 point move one way or the other to get me paid. If we have a big move, that's profit, that's profit. Even if it goes beyond my levels, I still make money. This is profit, goes beyond my levels, I still make money. So I have 6 ways to make money. I have 1 way to lose.
I
That's
have a
pretty
question
good, man.
on this.
Yeah, go ahead.
So it's similar, and it's not exact, but it's similar to like a straddle or a strangle or condors. Um, but when you look at plays like this,
Mhm.
usually the amount of risk is exceptionally more than what you can make. And here it looks like what you're doing
Uh-huh.
is for an X amount of risk, you can make what looks like 4 or 5 times that,
It's
which
true.
is like I'm curious. I don't know if I'll fully understand it in this session, but yeah, I do want you to explain like what there's 3 calls that you buy and then there's 3 that you sell. Is that what you're
It
doing or
it's 2 and 2. I have so I have a sell call here and a sell call here, and then I have buy call, buy call. I have a sell put here, then I have a buy put.
but
So the reason that
how do
go ahead.
you sell a call? Are these naked calls?
Well, because it's a sell and a buy and a buy and a sell, it's technically still a spread
Okay,
because
so you can
it
okay,
evens
you're
out.
creating a spread
Yep.
on your
So
own. This
it's
isn't
still
like a
defined risk. So
okay.
like this trade right here, because this is the SPX, by the way, so this is fairly expensive. SPX is a $5,000 instrument versus a SPY at 500. So this would cost me, maybe $2 on the SPY, okay, but it cost me about well, and I take that back. It cost me about a dollar 20 on the SPY, and it's going to cost me $11.20 in the SPX. That's just because the SPX is 10x instrument, right? But it's still defined risk because my spreads are here on the put side. My spreads are here on the call side. Now I do have max risk. The most I pay for the trade, if this goes absolutely nowhere, this is my max risk. And the nice thing is because I have sell options going, I still actually collect the credit on those sell options to offset this max risk. So if I don't hold this all the way to expiration, I'm only risking about 50% of this trade instead of 100% of the trade. So rarely will I go into expiration with this thing being full risk, which is another reason I like it. What's the downside of this trade? It's pretty complicated and complex. But once you get the grasp of it, I mean, I'm just essentially going out every 7 to 10 days and looking to see, okay, so I've got to spend about $1,200 on my account. Okay. I did this trade on Monday and I had a debit of $12.80. Well, I closed it out for $15 within 2 hours of the open on Tuesday. Now, if I don't do anything, and this is what I'll keep you posted on this as well, Frank, as the week develops. But right now you can see this dotted line. This is the spot price of the SPX. If
Right.
nothing happens, this continues to get less and less and less, and I'm taking on more risk as the week goes on. But if we have a move with tomorrow's PPI and we have an up shot or a down shot, again, once I get into this green area, I can start seeing some ramp up in profit. If I wanted to be a little bit more, patient at the time, I get some really good reward out here. So my example, if I'm risking, $12 is my max profit, this upside here is 13. So I mean, this is a 1-to-1 where I can risk $12, I can make $12. If I go, if the expected move is a little bit further, then all of a sudden we're talking 2-to-1. And this is my favorite part of the entire trade. So you said this is like a straddle, like a strangle. I'll build one of those and I'll show you that it's very different. And it's just because there's more legs to it. But if we go way past my levels, I still make money out here because my long options are so valuable at that point that they still get me paid. So,
Okay.
like I said, there's 6 ways to make money and 1 way to lose. And I get it. Like, this isn't foolproof, and I'm never going to say that this is the greatest trade ever. It costs a ton of money to take this trade. It's a big debit, and it also is a crap ton of fees, right? If I'm paying for entries and I got to pay $1.20 per contract, that adds up, right? Every single week that I'm taking this trade, that's going to cost me thousands of dollars in commissions but of course, I'm trying to make money. So let me show you the difference here. If I just cleared this and give me, you want to see like a strangle or a straddle, because you can do longs, right? You can do long strangle, long straddles.
Right.
Okay, so
Either one. Let's just do
build one.
straddle.
Okay, so let's build one. Let's do a straddle, and that's essentially just an at the money. So I'll just take this.
It's
Okay,
easier.
and so we'll do an at the money, and let's trade. Let's do the SPY. So that's a little bit more of a cost-effective instrument. So if we edit the SPY and just do an at the money. Now I'll say this, current time right now, it's March 13th. Let's go out to the 22nd, because that gives us the time to get through the Fed next week in case the market's a little slow and sluggish for the rest of this week. And we're trading at current price, 516. We buy a call, we buy a put, right? This is a long straddle. Now, I wish I could zoom out of this thing. But point is, if nothing happens and it stays right here, then this is where my max risk is. I pay $8 for this debit, and I need price to get above or below this level. So if the SPY can get above, we'll say 525, we're making money on the call side. If the SPY gets below 507.50, we're making money on the put side. But that means that the SPY, this is what's crazy about a long straddle. 507.50 to 525 is 18, or what is that, 1750? That's crazy, dude. Like this thing, in order for me to get paid, we only have to go about, I'm trying to think here, maybe $8 that way and maybe $8 that way, right? That's our break even based on the debit. It can do that because, yes, the SPY can move, $10, $11 on the week. Last week it moved $13. So we know it's capable of moving that much. The problem is if it decides to go up, $5 and then go down $10, that's not going to cover my break evens, right? So you have unlimited profit potential, and these are awesome trades when the market is ripping beyond those expected moves. But that's what you're buying, is like you're buying the high volatility, you're buying the catalyst. And sometimes they're too expensive. So what I typically look at, if I'm doing a straddle, and we talked about this, if I just added in a couple of sell legs against it. So if I buy the 516, let's just sell on the call side. Let's sell the 525. So we'll go $10. Let's go with the 526. And then the 516, let's sell the 506 put. Okay. So what this should do is this should reduce the debit significantly. And now, let's see here. I did that incorrectly. So I've got to change these to buys. So the 520, these have to be sells there. This will change the profile quite a bit. Okay. So now I go from paying $8 and change to $6 and change. Now, would this be a little bit more acceptable if we go to, the 525 mark? We're almost maxed out of profit. If we go to the 507, 506, we're almost maxed out of profit. I put my strikes $10 apart, right? So my max profit here is $10, but I'm paying $6.25. So that gives me $3.75 a profit if I'm correct. And I tighten up this window where my risk is at. I reduce the size of my debit. So this is what I typically look at is I want to make my debit smaller, and I want to make my weak spot in my trade smaller. And, I understand that this is not an unlimited gain, but the probability of profit is higher now because I'm paying less for the trade. And my profit target, if it's 625, let me do the math here. So if I made 375 on the trade divided by 625 debit, I'm getting a 60% return. And this could be in a matter of a week and a half. So if you want to be high probability, what's 25% of a 625 debit? $1.56. So I do this trade all the time. I do this in my trading room. If I take a trade for $1 or for $6.25, I could set a take profit at $7.75, right? Because I'll take that 25% take profit, just set the target at $7.75, and a lot of times that gets hits that will get hit every single week. It's
So are you selling? What did you add again? You added some sells.
Correct. Yep. So look at the legs here. So I have the so I did the initial straddle at 516. So I buy the 516 call, buy the 516 put, and then
It's
against
tough to
those,
read.
what's that?
It's a little tough to read, but
Okay.
I'm just trying to listen to what you say.
Okay, so here I'll just type it out. If it's hard to see it, then here's what I'm doing. So it's a 322 expiration, and we'll call this a long straddle. So I buy the 516 call, I buy the 516 put. Okay, now
Right.
that by itself is an $8.25 debit. If I add to that a sell on the 526 call and a 506 put, those give me, right, that's $10 difference. You follow me? Yeah. So a $10 difference. And the $10 is now my max profit. So if the floor falls out of the SPY and we go to 490, doesn't matter. I'm capping my profit at 506, which is a $10 difference. Fine. So, but the nice thing is instead of paying $8 and change, I'm paying $6 now. The probability of current price moving at least $6 one way or the other, that's very, very high, because every single week the average is like $9 or $10. So this should allow me to see a profit regularly, right? It should. Now, does it happen every week? Not every week, but most weeks, yes. In my trading room, we've had countless weeks where, I mean, going back to, I launched a course like last summer. It's like every week we did straddles and strangles and had profit almost every single week. It was a very easy trade. And this is how we're doing it a little bit more cost effectively. So that way we don't pay a ton for those debits. We max out our profit, yes, but we increase the probability of profit. So all I'm doing is, like you see there, I'm selling a call against the long position to help me offset the cost. That's all it is.
So you build these, I guess these trades up beforehand as like a limit order or something, or do you like? Is there a pre-built? I
Well,
don't know.
I build it here first, right? I can see every leg. So if I do this and I price it out, I can see that I'm gonna pay about 625. Now, what I like is, what is this level? What is this level? Here's my max risk. Okay. So as long as I'm confident when I look at my chart, if I believe with a high probability that price can get to this level or price can get to this level, that allows me to take profit. And so I just need to, and I can build this out where I could probably show going into next, I can build this in Tasty Trade and probably see a probability of profit here. Let me delete this trade. Let's go to the SPY and let's build this out, and then we can wrap things up. So if I went out to the 22nd and I do a straddle, so I'm going to do the long 516 and the long 516. Now, all I want you to do, let me zoom this in again and see the probability of profit. Here is a zoom in. So I buy the 516s. If I sell against that, here's the 506 put and here's the 526 call. Okay. So I have the long call, long put. I sell the call and I sell the put. Now, right here, my probability of profit went from 44% to 61%. Okay. My max risk went from $8 and change now to $6 and change. My max profit is capped, but probability of profit 61%. So if I wanted to increase my probability, watch the difference here. If I did like 516, if I go 510, and then I do a 522, so I'll go $6 different, right? I can increase my probability now to 70%, but my max risk is what I pay for the trade, but I cap my profit because I'm going $6 here. I'm still paying $460 for the trade.
Would the risk go up?
The risk goes down because I'm paying less for the debit.
Okay.
Yeah. So the debit is less, but I mean, I'm still capping my upside. But again, I went from a 61% probability now 70% probability. Right.
Okay.
So again, this is what I keep talking about. Like, I love options because there's always a trade-off. If I want to increase my probability of profit, I'm probably gonna have to take a less reward than risk. Right. If I want to increase my reward to risk, then I'm gonna have to take a slightly less probability of profit. But
Right.
rather than just doing this by itself, okay, if I just did that, I'm paying $8 for this trade. And worst case scenario is, let's say that over the next week, price goes this way, this way, this way, this way, this way, and it goes absolutely nowhere, right? If I can't cover that $8 that I paid for this trade, I make $0. This trade will just become worthless. And that's what sucks, is I don't want to go long options and have it expire worthless. So if I'm going long the option for volatility, I'm trying to price it in such a way that I have a high probability profit. So we start out here about 50% because we're at a straddle. But if I want to take that, increase it to 70%, the way I do that is I cap my profit here, I cap my profit here, but we do that within an expected move that can happen all the time, right?
Okay. Yeah.
So a lot of ways to do it. And one more thing. So you said straddles and strangles. So a strangle is this. If I did a 517 and a 515, that's now considered a strangle.
Right.
Just look at the difference in price. If I put them together and this is a straddle, that's 829 in a debit. If I do one strike apart, now it's 731.
So you
So a
cut
strangle just
down.
moves your strikes and you go, it's kind of technically going out of the money by a strike or two. And you can take this as far as you want. Like I did this a lot last year. I would do like the 30 delta on all of these. So this is a 521 by 510. Now I pay $4 for that debit and I have no cap on my upside. So if we have a big volatility mover by the 22nd, if I pay $4 and the Fed, whatever we need for a catalyst, if this market, just dumps to 500, I'm going to be up $10 on I pay $4 for it. I can
I
make
mean, but
more
that's
in
a
reward
heavy
than risk.
move, though.
What's
Like
that?
this seems like something you would do on, I don't know,
It's
not
it's it's
every
great.
week.
Look, FOMC, it's great for. CPI, unfortunately, this week was not a big mover. But CPI and PPI and like all these major catalysts, it should be a good one for. But not right now. I mean, I think right now it's going to be all about the Fed. As I'm watching price today, be very slow. Maybe the market's just, we have PPI tomorrow, Fed next week. We'll see if the market opens up the floodgates a little bit more. Remember this too. It's also Q1. We've had a great run out of the gates. The market's so complacent right now just to be bullish, bullish, bullish that it doesn't want to roll over yet. And so there's like this personality to the market. There's a cadence and rhythm to the market. Sometimes you just gotta, put your Keanu Reeves Neo cap in and just plug into the market and just like, what do you see? If you see bullish, be bullish. It's if you're always a contrarian, some contrarians make a ton of money eventually, but when you're wrong and you're trying to short Nvidia, short Nvidia, short Nvidia, it's like, why? You miss you're wasting time and energy when you're fighting these ridiculous moves that are pretty darn obvious. So anyway,
Yeah.
fun stuff.
No, very true. Um, I'm usually never a market contrarian. I'm always like a bull. This is just one of those few times, I guess.
Yeah. I'm a sentiment contrarian. I think that once we get into, I mean, you guys have it on the Edge Finder. I mean, when you look at the AAII or the Fear and Greed Index, I'm definitely contrarian when it comes to those. I mean, the perfect example is last October. The fear and greed was extremely fearful. The CTA positioning was incredibly bearish, and it pivoted so quickly into that end of October last year. And here we are looking at 4 straight months of bullishness. So when we get to extreme greed, it's
That's when
time
you
to
gotta
start
get,
looking to take some profit, protect some profit, just make
yeah.
sure that you're not getting overly exposed to the long side because more of the reward to risk is favored towards at least a correction.
And
So
that's where I feel like we are now,
yeah, I think
but
so too.
I could be wrong
Yeah.
because my short plays have yet to come to fruition.
Yep. And look, man, here's what there's a couple ways this happens, right? And then we'll wrap up the session. I got to jump into my other trading room. A lot of times the markets, like this, we've had this trend line drawn here, Frank, for 3 or 4 weeks, right? There's nothing
Yeah.
about this, and I mean, I think you talked about it. If I don't see this thing breaking, like you can't force a trade. So there's 2 ways this happens. We either have this massive correction happening very quickly, and the market just cleanses itself for the correction, or what's even more frustrating is we could be right directionally on the bear side, and we can see that the market just slowly grinds or kind of rolls over, and then eventually starts to give back. But that timing can drive traders crazy because you're like, it's time to short it, and it just takes days and days and weeks, maybe months before the market rolls over. So it's either going to be like a quick cleanse or it's going to be this slow like rollover top. But eventually, when it rolls over and the floor breaks, that's when we get those big corrections, and we'll see it. I mean, markets don't go unchecked. Look, Bitcoin's rally doesn't go unchecked. Gold's rally doesn't go unchecked. Nvidia's rally doesn't go unchecked. I promise you that we will see some obedience in the markets. We're not just going to have endless green candles. We're not just going to have to the moon. Like, stuff gets checked, and there's going to be, highs and lows and wave structures in these markets. It's just how and when and what's kind of driving it. But, that's why it's a game. We got to play the game,
Yeah. Yeah.
So,
Very true. Well,
all
I
right,
guess
dude.
but yeah, I guess we'll wrap it up here.
Okay. Well, let's talk again whenever you need. We have PPI data tomorrow, so obviously things are going to be moving and shaking a little bit. Melt up continues. We're just kind of clinging to these highs. I think the 520 level, 5200 level on the SPX is at least a near-term resistance. I just keep staring at the chart. I love this indicator that you see here. It's overbought with divergence. It hasn't failed me in over 20 years of trading. I know it's early. I know it's anticipatory, but this is the best way for me to get ready for some type of correction. And it's just a matter of what is the bow tie and the serving of, here's your correction. I don't know what it's going to be. I don't know. I mean, we don't know that, but I do think technically that it's coming. It's just a matter of what and when. So, but guess what? We'll be here to catch it.
Yep.
Cool. All right, Frank, thanks,
Hopefully.
dude. You can sign us off, and I'll see you guys later.
Okay. Thanks, Chris.
Thanks.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.